Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is the August 12th edition of Market Outlook. Be sure to participate in our Investor Sentiment Survey, and we'll be sure to send you the results. As you know, if you have been participating, that last week the bullish sentiment improved quite a bit, but now it's about equal between bulls and bears. As we get more data, we'll send you more information and see how accurate our own investor survey is. Also, if you like this recording and the text version of Market Outlook, be sure to sign up on our website, www.marketgauge.com. All right, so last week we had talked about the TLTs and the overall market scenario. Let's see where we are right now. Well, first of all, going out and looking at a little bit longer term, you can see that our monthly charts are nicely intact. There's quite a bit of compression here on the yearly highs in the S&P. You can see we've traded in this tight range right here. So on the monthly charts, if we can blow through those recent highs, you got enough compression to at least test the recent highs in 2007 and even going back to 2000 before the meltdown and the internet bubble. So this is pretty interesting. We got enough compression in here to definitely power a test of those all-time highs in the market. So that's pretty interesting relative to the overall perception of how the global economy and certain issues still looming here, such as the fiscal crisis that could certainly evolve if we can't come to some sort of agreement on budget cuts and things of that sort. Now let's take a look at the weekly chart in the S&P, and you can see we're sort of in this overbought area. Again, this also would coincide with some of the market internals. So even though the long-term trend, as you can see, is intact on the monthly charts and we're sort of accelerating to the upside, you can see on the weekly charts the same thing, longer term trend within the weekly charts intact, as well as the 65-week moving average. Now on a basis here on the daily charts, you can see we've been basically sticking to the high end of the this channel and actually have closed a number of days through it. So you know you're at a very, very critical level. I expect some increased volatility as opposed to the compression and the rather muted sort of upward drift, which in itself is interesting and generally considered positive. However, with that in mind, you can see I put in an important horizontal line here. This is important support, which coincides with the low of last week and also the close on last Friday on the big update. So if we start failing through that level, which is about 139.30 or so, you should have cause for concern, because that would mean that you're into a correction mode and you can easily back down to a test of this rising 50-day moving average. But holding support within this zone in here, there's a good chance that you'll still accelerate to the upside. So that's your critical level. Now let's take a look at volatility. The volatility, or the this is a good sentiment index. You can see the VIX, which measures the out-of-the-money call options on the S&P 500. Then they're the nearest out of the money that expire within 30 to 45 days, and you can see that we've been drifting down, that we're under the 50-day moving average, which means the sentiment is positive. There's no fear in this market, and we're sort of trading towards the lower end of the Bollinger Band. And remember, we use the Bollinger Bands because it's a self-adjusting channel of sorts. So we're not looking at absolute levels, but relative levels. And you can see, even though we're trading towards the bottom, we certainly haven't breached the low, which would the low of the Bollinger Channel, which would indicate extreme exuberance. So in this case, sentiment is measured by volatility is extremely positive, 50-day under the 200, and just sort of drifting lower as the market drifts higher. So that's a positive sign. Let's take a look at the market indicators. So it's interesting because you've got a divergence between what I would call the 1 to 3 week intermediate term view, if you're an active trader, and the very short term view. The very short term view, we got to overbought levels earlier in the week and turned down even as the market drifted up. So that shows you some non-confirmation. And you can see that on the 10-day advanced decline as well as the up-down volume ratio has both turned down at overbought levels. So that's what we like to see for a confirmed sell indicator. Now again, this indicator is good generally for a couple days, maybe a week or so. So what we have here on the short term in the spiders is definitely a cautionary flag in the short term. Again, the price action though, as we reviewed at the upper end of that rising channel, looks pretty positive. So if we take out that 139.30 to 139.50 level in the spiders, that would be a cause of concern in conjunction with this short-term sell signal. Now, on an intermediate term basis, you can see we got oversold like clockwork, worked right on the lows here around that 133 to 134 level, and we've been moving up ever since, and we have not reached an overbought level, and we're still working off of that buy signal. So short term negative, longer term looking out 1 to 3 weeks, extremely positive. Now, one of the things that we focused on last week was the fact that the interest rates look like they were in sort of a bubble. Interestingly enough, as we called it, the market gapped much lower by midweek, and 1, 2, 3, 4, 5, that we were sitting on that 50-day moving average. It's now starting to roll over, and so this possible top and blow off in the in rates, resulting in rising prices now and a rise in interest rates seems to be playing out. Now, one thing of caution, we did get a bit oversold late Thursday, where the market recovered, put in sort of this hammer bottom with a gap up on Friday, but then still closing weak. So certainly we can see another test of that 50-day moving average, which is now starting to roll over while we're still in this topping phase. On the other hand, if we can get through the lows put in on Thursday, you would have quite a number of people trapped. Everybody who basically bought on that new spike high here and on this one here would be trapped. So let's take a close look. I would say if we take out again that price of around 124 on a closing basis, you would presume that a top is in. Now let's take a look at Westin Digital. Now this is a very, very interesting chart, and this is storage systems. This stock, along with Seagate Technologies and storage devices, which is a major component for computers, has been exhibiting a very, very interesting pattern. Westin Digital, this stock chart is monthly going back to the beginning when this thing went public in the early 90s. You can see it never has breached the highs that it made back in 1997. Now, looking at this chart, you can see that there's tremendous compression over the last several years. Since 2009 to 2012, we've been sort of in this sideways action and looking to break out. You've got enough compression here to certainly take out the level of resistance over here that was built back almost 15, 16 years ago. So you've got enough power for this thing to really move out to new highs. Now, of note, it's interesting that the demand for storage, even though the price of storing a bit has gone down dramatically, with with videos and the amount of data being stored and kept on computers, the price of storage is being outstripped by its demand. So there are some interesting fundamental factors, and you can see that it looks like we're about to explode to the upside. Let's take a look at the daily charts here and the weekly. You can see again on Friday really strong action. The market in Westin Digital up 2.23%, way outperforming the market, and closing just about on the highs for the year and for several years. So let's keep an eye on it. Obviously, we're sort of in overbought zone on the chart, on the RSI, on the daily. We're also a bit overbought on the weekly. So this is, even though it's running very, very strong, you got this nice compression pattern on a monthly basis. You also need to be concerned about some of the short-term overbought situation. So be nice to look at this if we can get somewhat of a short-term correction. But this is why we have our services. So if you want to follow how we're going to play this type of trading pattern, be sure to sign up for Mish's Market Minute or follow us in our day trading service and active day trading room. Now, another thing to keep note of is EWW. Here's another stock, and this pattern is even potentially more powerful because we're actually right against the all-time highs, and this one is Mexico. So despite everything that you hear in the news about how horrible things are in Mexico with the cartel and the drug wars, look at the chart. You can see that we're basically at all-time highs on this ETF, which mimics the stock market in Mexico. But more importantly, take a look at this level of compression and how this level of resistance is classic. You've got 1, 2, 3, 4, almost 5 points where on a monthly basis you try to get above, just above the recent levels. If we can bust out through here, you're looking at a potential, what I would call a head and shoulders or an inverse head and shoulders pattern that has literally taken 6 years to form on the monthly charts. If that's the case, you can have quite a dramatic move up, and it looks like things will definitely improve in Mexico. So this is one of the leading stock markets right now and poised to really punch through and blow out and potentially lead the world stock markets to new highs. So interesting to note. Anyway, that's the synopsis for this week. Hope you enjoyed it. And again, don't forget to participate in that investor survey. Sign up for our weekly newsletter, this one, Market Outlook. And if you want to know how we're going to play these particular patterns, follow us on our premium services, Mish's service, mish.marketgauge.com, and you can sign up for a for that subscription service, which focuses on swing and mini swing trades, or our day trading room if you're more active. Thanks. Have a great weekend, and bye for now.